Kenya's Equity Bank, based in Nairobi, is making investments and impacting lives in Africa. Its success is attributed to its strong focus on governance and support from reputable shareholders. The bank is also known for its commitment to inclusivity and serving diverse customers. VOA's Paul Ndiho spoke to James Mwangi, the CEO and Managing Director of Equity Group Holdings, who shared his insights.
Equity Group is a financial group operating in East and Central Africa. It's a systemic financial system, one of the largest banking groups in the region, the second largest company in Nairobi Stock Exchange by market cap, and the strongest and highest valued brand in the region.
What has it taken for you to get to that point where you are arguably one of the best banks?
We focused on governance, and we strengthened our governance structures to the highest point possible. That enabled us to attract the best shareholders in the world, including the World Bank. IFC is the second largest, the sovereign wealth fund of Norway, Allies, which is Norfund, Rabobank and FMO, and that really created confidence. The second thing was then really focus on being relevant to the needs of our customers. And the third one was being inclusive. We felt nobody should be left behind, from refugees to micro small enterprises to small scale farmers to the high net worth individuals and anything in between. We gave them appropriate product, appropriate and relevant channels for them, and that made the bank to be home to 20 million customers, making it the largest bank in the region.
Let's go back to the point you just made, making it relevant and making it closer to the people. What do you mean exactly? Right?
We decided to be customer-led or market-led, as people would say. Through focused group discussions, we understood the pain points of the potential customers, and then we tailor-made products to suit to those needs. We looked at the price point that they could afford the product. That eventually made us a high volume, low margin business to bring affordability. And we use technology extensively. 98% of all our transactions are now on digital platforms, and that has really made it scalable.
When I've talked to a lot of people, especially the ordinary person, they talk about the cost of borrowing money. And in some cases, it's very, very expensive for them to borrow and be able to repay back. What incentives have you put in place, especially in your bank, to make sure that those small borrowers can come in, borrow money at a reasonable price?
We have used the twin engine model, and what the foundation which focuses on the social and sustainability aspect has helped us to do is to bring breaded finance on the table. And breaded finance means there is commercial financing, there is development financing, there is philanthropic money from philanthropists, there is corporate foundations, and that has helped us to formulate solutions like credit risk guarantees, which enables those without security, women and young people, to have access. Part of it also is about giving some level of subsidy to bring affordability. And that is how we have been able to deliver financial services to refugees, internally displaced persons and beneficiaries of social safety net programs.
You talked about how you're incorporating technology into the banking system. How big is technology from your vantage point?
Technology is very big for Equity Group because, as we said, we needed to adopt a high volume, low margin model. And you can only do that by moving away from brick and mortar, fixed cost structures to variable cost structures and being online, such that customers reach you through clicks on their devices. And that helps to break the barriers of geography and time. You compress both, and you are able to offer banking 24 hours wherever the customer is. Now, to be able to do that, we needed to invest heavily on fourth industrial technologies. And broadly, that requires massive investment. Today we signed an agreement with HP to provide us with infrastructural capability, both for processing and storage, up to $200 million, up to 2030. So that is the level of innovations. Today we also unveiled a partnership with Microsoft and MasterCard Corporation. And if you look at there, the issue is rollout at solution for small-scale farmers.
How have you been able to scale where others have failed?
We have scaled because of commitment. As an African banking group, we felt we have to provide solutions to the excluded in the financial sectors. We build a purpose that centers on changing lives, giving dignity and expanding opportunities. When you talk about expanding opportunities in the African continent, your target should be the 1.3 billion people. So even at 20%, at 20 million, we are still tiny to the aspiration and objective of being providing us solutions. And we use technology extensively. 98% of all our transactions are now on digital platforms, and that has really made it scalable. And that speaks to the point where today we were with Microsoft, we were with HP, because we need to leapfrog on technology. We need to be globally competitive. We need to be efficient. And so if we could be the first adopters for the industrial technology, because we have no legacy systems, then we can be globally competitive.
Since you focus a lot more on technology, how about the issue of AI? Everybody is talking about how AI can revolutionize that industry, the banking industry, how AI can either create jobs or take away jobs. How do you see AI playing a role in the banking sector?
We start with the digitization. The most important thing is digital inclusion, because AI is layered on top of digitized systems. Then we use machine learning to collect and gather all the data. And with that data lakes that we build from all these digital systems, then we start studying the behavior of people, the needs of the people. So we do deep analysis, then feed artificial intelligence in decision making. The insights that will be built from analysis of big data will help them to create generative AI, which is central then to decision making. I don't really believe that AI will replace jobs. What it will do is that it will create jobs of the future. It's a tool of enablement. It's like what people feared, that computers will kill jobs. Computers only increased jobs and changed the quality of the jobs that we were doing, from manual jobs to intellectual jobs. Again, AI takes that to the next level of using human intelligence to develop solutions that AI can provide insights. So for me, success is expanded opportunity for the people. They can feed their families, they can provide for their children, they can afford health. That is what success looks like. Banking is just a tool of achieving that greater objective.
How many markets are you in?
We're in 7 markets. We're in DRC, we're in Uganda, we're in Rwanda, we're in Tanzania, we're in South Sudan, we're in Kenya, and Ethiopia. And broadly, we're a systemic bank in all the markets. We're either between number 1 and number 4.
Dr. Mwangi, thank you so much for your time.
Thank you for having me.
A pleasure talking to you, sir.
Thank you.
That was Dr. James Mwangi, the CEO and Managing Director of Equity Group Holdings, speaking to VOA's Paul Ndiho.